Welcome to Flippening, the first and original podcast for full-time, professional, and institutional crypto investors. I'm your host, Clay Collins. Each week, we discuss the cryptocurrency economy, new investment strategies for maximizing returns, and stories from the front lines of financial disruption. Go to flippening.com to join our newsletter for cryptocurrency investors and find out just why this podcast is called Flippening.
Clay Collins is the CEO of Nomics. All opinions expressed by Clay and podcast guests are solely their own opinion and do not reflect the opinion of Nomics or any other company. This podcast is for informational and entertainment purposes only and should not be relied upon as the basis for investment decisions.
This is part 2 of my conversation with Ateet Ahluwalia. I really enjoyed the content from part 1 and wanted to give you a second chance to hear from Ateet and tease the first episode. The entire point of these second shorter episodes is to give you some exposure to a guest, in case you want to listen to the prior longer form interview. If you didn't catch our previous episode, here's some background. Ateet is a managing director at CoVenture Crypto, and in a past life, he was a macro credit trader at Barclays, a macro portfolio manager at Blue Crest Capital, and a credit index trader at Goldman Sachs. In part 1 of this 2-part series, we discuss quantitative crypto investing, the values of quantitative trading, and why whatever idea you have must be quantified, and how Ateet's investment research during the Cyprus bailout led him to Bitcoin. In this, part 2 of our conversation, we play a fun lightning round game of overrated, underrated, discuss the impact that regulation is likely to have on the space, and take stock of the real impact that our community is having on the world. So yeah, let's play a lightning round of overrated, underrated / random questions. Bitcoin futures, overrated or underrated?
Underrated. As soon as they get more volume to the exchanges, it could lead to potentially other things happening in the space, which can only build it.
The impact of a Bitcoin ETF, overrated or underrated?
Massively underrated to an extent I can't even explain, because that gets retail investors involved. And that is when you can see meaningful holdings move into it. It's an easier on-ramp into the cryptosphere.
Favorite programming language?
Python, easy, simple, straightforward, no looking things up to figure out XYZ. It's just there and it's in your face.
Favorite analysis tool for quantitative trading, like R, Excel?
Oh man, I'm a big fan of R. I'm a big fan of Python. I'm a fan of Java. I mean, look, anything that allows me to analyze the space, I'm a fan of, so my answer is going to suck.
Bear markets, overrated or underrated?
Misunderstood and underrated. Let the tech cycle catch up to the hype cycle. It's good for us.
I have a friend whose father has a history of fires, and he says that the problem with Detroit is they just never had a good fire. He's like, LA had a good fire, Chicago had a good fire, New York had a good fire, just clears everything out.
London had a good fire?
London had a good fire. He's like, there's just never been a good fire in Detroit. That's the problem.
Oh my gosh.
Number one thing you'd like to see improve about the data in the space?
Consistency. I think a lot of data is interpolated and it's not real, and it's just all over the shop. Consistency would be great, like some kind of exchanges coming together to create a standard.
So primary source data, more primary source data rather than analyzed data, or that's just part of it?
Precisely.
Okay, time out. I'm going to do some native advertising for the Nomics API. Ateet just mentioned how crappy the data is in this space. Well, that issue is exactly what the Nomics API addresses. The company I co-founded, Nomics, offers squeaky clean and normalized primary source trade data offered through one fast and modern API. Instead of having to integrate with a bunch of exchange APIs of varying quality, you can get everything through one screaming fast firehose. If you found that you or your developer have to spend too much time cleaning up and maintaining datasets instead of identifying opportunities, or if you're tired of interpolated data and want raw primary source trades delivered simply and consistently with top-notch support and SLAs, then check us out at nomics.com. Okay, back to the show. Telegram groups, underrated or overrated?
Unable to answer because I don't really follow many.
Indexing in the space, overrated or underrated?
Dramatically underrated.
Oh, interesting.
Index funds, indexing, I think that it just allows one to get more exposure through diversification. Depending on how it's structured, it could be an intelligent way to get access.
Proprietary knowledge, underrated or overrated?
If you could quantify it, it's beautiful. If you can't, it's a waste of time.
Value investing in this space, overrated or underrated?
In my opinion, massively overrated. I don't know, like you can go down a rabbit hole of what is and isn't value. The metrics change all the time. And to date, I haven't seen anything statistically significant in that space. But I'm cognizant of the fact that it will evolve. And as the space matures, that could be a flavor of ice cream I enjoy.
Ethereum, overrated or underrated?
Underrated. I think having a benevolent dictator at the head is something that is always a good thing. And thus far, that's been the case. So let's see. The jury's still out on that. Ask me in 10 years. It's like, I can't even give you a good answer. I think Ethereum's fantastic, personally. But I mean, look, it's got a lot of kinks to work out. They understand that and they're working towards it. I could never hate on that.
Non-custodial decentralized exchanges, overrated or underrated?
Wow. Given everything I've said about custodianship, I more favor traditional custodianship. And I realize I'm going to get hate mail to my eyeballs on it, but that's just me.
What's your Twitter handle?
At please forget me.
Please, no more hate.
Please don't hate me.
I have a bunch of them here, but it's just all like about specific projects. And it strikes me that a lot of these things are just like numbers on a chart for you.
Let's be honest. There's a lot of people that are supremely qualified to take the lightning round and talk about very specific projects, the ins and outs. I'm not that guy. I could talk about like the overarching like macro thesis around the space, liquidity, data, testing, that kind of stuff. But you'd be better served asking some of the geniuses that I'm privileged enough to talk to in the space about projects. That's actually one of the best parts about the space, man. I'll just call someone up and it's just, they're so happy to talk about it. They're so passionate. If you have a good teacher, it takes 3 months of work and makes it 30 minutes, right? Everyone in this space, for the most part, is just a total beast when it comes to that. I think I'm very fortunate to work in the space because of it.
Exponential moving averages, overrated or underrated?
Wow. I think adequately rated because so many people use them. But there's a reason they do, right?
NVT ratio, overrated or underrated?
Pass.
Okay. Metcalfe's law, overrated or underrated?
I think we all appreciate it. So I think it's adequately rated at a very high level.
Well, that wraps up this lightning round. That was a lot of fun. Ateet, before we get going, do you have any last words for our listeners?
Yeah, I think people, if there's one thing I get impressed upon people is that thoughtful regulation would be such a blessing to this space. It's something that we need. We need these guys who regulate other asset classes to be involved because what it does is it alleviates the issue around fiduciary standards that a lot of the big players have to think about before entering into a space. And all that thoughtful regulation does is it enhances the flow of money to the people in the dev space, those teams that deserve the money. It eliminates bad actors. It brings more credibility to the space. It gets more people involved that otherwise wouldn't. Case in point, again, BlackRock has 6.2 trillion under management. 1 BIP of their assets is 20% of the current market cap of the crypto sphere. Get that money into the space, get it in front of intelligent dev teams that can do real good and actually allow the tech cycle to catch up to this hype cycle. Allow like middle class and other pockets of America that aren't participating. Like, look, 8% are participating. If we can get that to 80%, that would be a dream come true. I don't know if that ever happens or how long it would take, but having regulation around it, it facilitates all these things. So I think some of the negative talk around regulation needs to totally stop and people need to look at the fruits of good, high quality regulation and look to Japan. Look no further than Japan as a very thoughtful test case of what true regulation can do in the space as far as increasing the technology to match the hype cycle, getting more actors involved, keeping good actors involved and punishing bad actors. I think that's something that we all really need to think about and be excited for because it's going to help the space. Thinking about it in terms of, it'll send Bitcoin crashing down. Like it might, whatever, it might, but it legitimizes the space. And when you legitimize a space, then you get the big players involved. When you get the big players involved, you get everyone involved. And it turns into the dream that a lot of people foresee it to be. That is the one catalyst that must be in place for any hopes, dreams, projections to actually come true. And I want people to actually see it that way and not see it as a negative thing. I see it only as a positive thing. The only other thing that I really think about is the crypto space is incredible because it has a bunch of people that are working on different projects that are banding together in loose, informal connections in a much more mature fashion, thinking that the much more Silicon Valley VC mentality of a rising tide lifting all boats. I can't emphasize that enough. It's going to increase the amount of high quality projects in the space, the amount of liquidity in the space, the amount of productivity in the space. And I really appreciate that coming from a traditional finance background, which is more zero-sum game. I can't stress that enough. It's a beautiful thing. I hope that continues.
So that concludes this two-part series with Ateet Ahluwalia of CoVenture Crypto. I created this second episode from the interview in part because the content didn't thematically fit into part one, but also to tease Ateet in the first interview to folks who haven't listened to it yet. So if you've made it this far and enjoyed Ateet, you know what to do. Also, heads up that our next episode will be with Eric Meltzer of InBlockchain, the largest and most influential investment group in the Chinese blockchain space. To give you a sense of InBlockchain's size and scope, consider that they recently announced a $1.6 billion fund. When people talk about institutional investing, these are the kinds of numbers they're referring to. It's a fascinating interview. Stay tuned to listen to it next week. That's it for this week. To sign up for our free crypto investing newsletter, listen to other episodes, or get the show notes from this episode, please visit flippening.com. I also invite you to check out the startup that funds this podcast, Nomics, spelled Nomics, at nomics.com. Finally, if you got value from the show, the biggest thing you can do to help us out is to leave a 5-star review with some comments and feedback on iTunes, Stitcher, or wherever you listen to podcasts. Thanks for listening, and see you next week.